Opinions expressed herein are subject to change and not necessarily the opinion of the firm. Past performance is no guarantee of future results. The information presented herein is for informational purposes only and is not intended to provide personal investment advice. It is important that you consider your tolerance for risk and investment goals when making investment decisions. Investing in securities does involve risk and the potential of losing money. The material does not constitute research, investment advice, or trade recommendations.
And now introducing Mr. Keith Lanton.
Hi, good morning, Keith. I want to wish everyone who's celebrating a Happy New Year. So, today, September 21st, just about fall. I'm not sure exactly this year what moment fall starts, but we're about to begin a new season, 21 days into the month, and want to go over where we are in financial markets. We're looking with futures down this morning. September has been a rough month for the equity market. Historically, it's been the roughest month. Oftentimes people think it's October, but it's September. So far, we're down over 5%, and that's before we recognize what's taken place today. Of course, this morning doesn't mean that what we see at the open will necessarily translate into what we see at the end of the day. So what we're going to do this morning is going to go over a couple of thoughts. Sal Favarolo had sent me a article I'm going to share with you on what the successful people do when making small talk. I'm going to talk about some macro trends and some broad thinking from Ray Dalio, who runs the largest hedge fund, Bridgewater Associates. And then we're going to talk about what's going on this morning in news and financial markets, and a couple of stories from Barron's on perhaps where the ball is going and some mega trends, some things to think about as we work with clients and as investors think about how to position their portfolios for the rest of the year and for the years ahead. So, article I want to share with you this morning, based on Harvard research, and this article was published by Gary Burnison, who is the CEO of Korn Ferry, a global consulting firm, and he gave some advice on how to make more effective small talk. Almost every meeting that you participate in, and even when you sit down with a new potential client or prospect, regardless of what business you're in or what you do for a living, most of the time. So I was talking about Harvard research and small talk and what we can do to more effectively communicate. And what Harvard found in their research is that three of the most useless words you can use to begin a conversation or small talk are, how are you? They say that in general, the person doesn't really want to know, and the person responding generally doesn't tell the truth. So what is taking place is an lost opportunity to actually have a meaningful exchange. The Harvard researchers say the key to successful small talk is to simply ask the other person follow-up questions. In a series of experiments, researchers analyzed more than 300 online conversations, and that those who were asked more meaningful questions, those people who asked those questions, the people receiving those questions, found that person who was asking them to be more likable. So how do you ask more meaningful questions? The suggestion is ask a question that meets the criteria of the acronym ACT, A-C-T. A standing for authenticity, C standing for connection, and T standing for a topic that will give whomever it is that you are connecting with a taste of who you are. So what are some of those types of questions? Well, they suggest questions like, what are you looking forward to this week? What they suggest not doing, besides how are you, is one of the standard fallbacks is asking someone, well, how was your trip in today? How was traffic? Talking about the weather, very common icebreaker and fallback. But those are not conversations that necessarily give insight into whom we are, with the exception being if you know the person to whom you're speaking to, for example, is a large Los Angeles Dodger fan, then an icebreaker talking about last night's game would be appropriate. But when you're shooting in the dark, it is not appropriate. What they suggest is to be in the moment, observe your surroundings. Open your eyes before you open your mouth. So perhaps you're sitting in a conference room getting ready to meet with someone, and you notice an interesting piece of art on the wall. you can say something about that. Perhaps you see a picture on someone's desk that you're sitting, beginning a conversation with, and you see a picture of them on the ski slopes. You can relate to that and discuss, perhaps their passion for skiing, or where were you when that picture was taken, and turn it into something more personal. If you have some news that's newsworthy, share it. I adopted a pet over the weekend. My 6-year-old rode a bicycle for the first time yesterday. This is something that's genuine and is something that makes people feel that they have a connection to you. And critically important is when you are engaging in these conversations and this discussion is not to be mechanical. It's not just what you say, it's how you say it. You have to have the true feeling of passion, compassion, interest in your voice, in your body posture, and be able to have the appropriate eye contact when you're speaking. All of that will have an even greater impact than the actual words that you're saying. So I'm going to change gears here as you think about how to have small talk in whatever situations you find yourself in today and throughout the next few days, and hopefully something that you think about and able to adapt, and hopefully it'll be something that's meaningful. And you're going to switch to Ray Dalio, who runs Bridgewater Associates. Ray Dalio's got an exceptional long-term track record, although his hedge fund has been seriously lagging for the last several quarters. But what he will say is that while he may not necessarily be able to get every trend right on point, he has demonstrated a successful career of deep thinking and long-term success. And one of the adages on Wall Street is that smart money is often early. So perhaps some of his thoughts might even be more pertinent now, as he has had these views for several months to years at this point. So what is Ray Dalio saying? What he's saying, and this is his opinion, is that we are at an inflection point here in the United States, that we have several trends going on all at the same time, and what he's saying is that these trends are not unique to empires like the United States, that the issues that we are facing are common issues that have been faced by previous empires at similar stages of their life cycle, and the decisions that we as a nation make in the next several years may very well dictate how successful we are as a country, and may dictate how successful our financial markets are, because they reflect the success of the underlying country. And what he's saying is in the United States right now there is a money and credit cycle problem, and that's somewhat tied to a wealth and wealth gap problem. And at the same time, we are experiencing a challenge that we haven't experienced in the last 75 years, really since World War II, from an upcoming power that is seeking to displace the United States, and that is China. And what he's saying with respect to the United States is that we have this confluence of right now of an economic downturn brought about by the COVID virus, but nevertheless the reason that it's here is not necessarily as relevant as the fact that it exists, and we are being challenged internationally by a upcoming power. It's a fact that there's been a weakening of the competitive advantage of the United States, he says, over the last couple of decades. For example, the United States lost a lot of the education advantage relative to other countries. Our share of world GDP is reduced. The wealth gap between the rich and the poor here has widened, and that has contributed to political and social polarization. But he goes on to say, certainly all is not lost. The United States certainly has many competitive advantages, especially with respect to innovation and technology, that we still have the world's strongest military, but nevertheless on both those fronts also we're seeing more and more competition. He points to recent empires, the Dutch Empire and the British Empire. Both of those empires experienced the creation of debt, the printing of money, as things got more challenging, which is how we are responding to challenges. and they also experienced the fact that they had less educational advantages relative to the rest of the world. The Dutch had one of the oldest university systems in the world, and then the British still famed Oxford educational system, and then we here in the United States who have what is considered by many to be the best higher education system in our college system, but we're being challenged as were those empires. And those empires, similar to the United States, he would point out, experienced a life cycle. You're born, you die. The United States is a 75-year-old empire, and we are exhibiting signs of some stress. And what he would suggest is that we have critical decisions to make as a country and to determine the paths of our future. What he'd say is that and I'm paraphrasing here, but what he would say is that we are at this inflection point where our productivity and our dominance is being challenged. And a result of that, the initial cracks or stressors that take place in a economy are the stressors that take place to those who are in the middle to lower middle class. Those are the manufacturing jobs that President Trump so effectively was able to win over in the 2016 election, as that class was feeling a great deal of stress from international competition, in particular at that time pressure from China. And without the ability to lift productivity and lift that segment of the population up, country has two choices. One is to make hard decisions and redistribute wealth, which obviously is something that many are reluctant to do and may not always necessarily be the best path. Or, alternatively, what countries can do, which he would argue we have done, is you can print money and create more debt and redistribute that debt, like handing out $1,200 checks to your population. But when you do that, you take on a lot of debt. And what's happened in previous empires is at some point these great mighty countries print debt to the point where the rest of the world starts to question whether or not they want to hold that debt. The value of that debt starts to depreciate. The ability to be the reserve currency of the world diminishes. And what that means is that we, as Americans, have less purchasing power in the rest of the world, and that we, as Americans, have to, for the first time in our lives, start to think about not just what we are invested in terms of our investments, but what is it that we are invested with? In this case, dollars. So what he points out is that one of the reasons that the value of financial assets like stocks have gone up in the most recent crisis here, the COVID pandemic. Why have assets appreciated so rapidly? He would argue that one of the main reasons is that those assets are denominated in dollars. Dollars are becoming worth less, so those assets are getting repriced in dollars. Whether or not their real value has changed as much as their absolute value is something that's subject to debate. And he would also argue that perhaps gold has been a beneficiary as well of this printing of money, because gold is an asset that is based in dollars. So what do you do, in his opinion? He says you need to diversify well. That includes diversification of countries, currencies, and assets, because wealth is not so much destroyed as it shifts. When something goes down, something else is going up, so you have to look at all things on a relative basis. Diversify well and worry about the value of cash. Americans look at the value of everything in U.S. dollars, but they don't necessarily look at the value of the dollar. So, something to think about as you invest and do asset allocation. He would also argue currently in detail that holding on to cash is perhaps one of the most natural inclinations that you have in times of stress. Is let me go to cash, let me hold on to cash. And one of the arguments that he makes that in this crisis, different from other crises, is that there's a real potential that cash is trash, in the sense that cash is holding on to an asset that's both denominated in dollars in most likelihood, and secondarily is subject to the gradual diminishing of value because of not only currency depreciation but also inflation. So in this crisis in particular, you want to be mindful of your cash position and don't necessarily think of it as the safe haven that you have traditionally thought of it as. So, with that said, what do we do this morning? Shifting to where we are this morning, we are seeing futures accelerating to the downside. Dow futures now down a little over 600, S&P futures down 61, NASDAQ futures down 175 points, seeing a safe haven bid to Treasury prices, which are higher. What do we have going on this morning? We have some political uncertainty after the death of Justice Ruth Bader Ginsburg. President Trump, a little while ago on Fox and Friends this morning, suggested that he has a list of Supreme Court nominees that is down to 5, and that he expects to make an announcement on who his nominee will be by Friday or Saturday. Also this morning we have trade uncertainty after China announced provisions of its unreliable entity list. Didn't cite specific companies, but concerns on who they are thinking about, perhaps in retaliation to the United States banning WeChat, which is a Tencent company, and the United States trying to protect its interests by requiring that TikTok be owned by a U.S. subsidiary in some fashion. So the U.S. pushing back against China, China taking retaliatory actions without the specifics, causing some additional uncertainty. And then finally, there's uncertainty in the banking sector. There's reports leaked this morning that several global banks, including J.P. Morgan here in the United States, as well as Barclays, Deutsche Bank, Standard Chartered Bank, HSBC, overlooked money laundering for nearly 20 years. Some of the banks down 5 to 20% on these reports. J.P. Morgan this morning down about 5 points on this report this morning. Speaking of the TikTok front, reports that Oracle and Walmart received tentative approval from the U.S. government regarding a deal. Both stocks are trading higher in pre-market action. They would receive a cumulative 20% stake in TikTok's global business. Reports that the Trump administration has approved the tentative agreement that's been reached, although there's been mixed signals coming out of China on whether or not they are on board with that agreement. With respect to the Tencent WeChat app, a federal judge here in the United States has put a temporary stay on the halting of WeChat apps being distributed by the Apple and Android platforms. But nevertheless, lots of uncertainty regarding whether or not the WeChat app will be available in the United States, beyond the immediate future. Other companies in the news: Nikola, symbol NKLA, in the news frequently for the wild ride its stock has taken. They are trying to develop a pickup truck, an electric vehicle pickup truck. Lots of controversy around the company, and then General Motors said that they were going to work with Nikola. Then there was articles suggesting that there was lots of misinformation around Nikola, and there were reports that some hedge funds had written very negative press regarding Nikola. And this morning, its founder and chairman, who had been one of those widely accused of some of the misrepresentation with respect to Nikola, is stepping down. Resigning from the board amid these allegations of fraud. This is causing concern that perhaps there was truth to those allegations. The stock's down about 30% this morning. They did announce that a former vice chairman and board member of Nikola, former vice chairman at General Motors, will be taking over as the head of Nikola. Other news this morning. We have House Speaker Pelosi says she will use every arrow in her quiver to stop Supreme Court replacement, but will not leverage a government shutdown to slow down the nomination. Also reports that Speaker Pelosi and Treasury Secretary Mnuchin have not yet agreed on government government funding to avoid a shutdown. Funding for the U.S. government expires September 30th, and also concerns that given the political animosity exacerbated by the death of Justice Ginsburg, that the probability of a new stimulus deal is perhaps in greater jeopardy given the greater animus taking place in Washington, D.C. Other news this morning in the COVID-19 vaccine discussions, AstraZeneca saying their U.S. corona vaccine trial is still on hold. Roku and Comcast have reached a deal to carry Peacock on Roku devices. Some companies in the news. Oracle was upgraded to outperform from sector perform at RBC, $68 target, perhaps triggered by some of the optimism with respect to the TikTok deal. Tanger Factory Outlet, symbol SKT, was upgraded to sector weight from underweight at Key Bank this morning. Also, Illumina, symbol ILMN, is going to pay $7.1 billion for cancer test developer Grail. Cancer test developer Grail looking to early stage blood test for cancer. That company had backing both from Jeff Bezos and from Bill Gates. And another cancer drug story, Immunetics, IMMU, which is being acquired by Gilead, announcing that they had experienced this positive data with respect to their cancer drug Trodelvy. Patients receiving that drug for advanced forms of breast cancer exhibited significantly improved survival, perhaps boosting the possibility of that drug gaining approval. I'm going to talk a little bit about markets from Barron's perspective, and then turn things over to Brad to talk some more about financial markets. So taking a look here from Barron's, Barron's talking about that the tech boom, and specifically the stock prices of tech stocks, they say appears to be slowing down, and they talk about the fact that we could be experiencing a rotation. This is building on the theme we talked about last week, where Barron's was suggesting that markets may not necessarily move significantly higher, but different stocks could take the leadership mantle as technology shares grow weary after significant moves higher. So last week, industrials, materials, and energy were the best performing sectors in the S&P 500 last week, each up more than 4%, as the broader index lost just over 0.5%. The economically sensitive small cap Russell 2000 was up 2.6% against the backdrop of markets being lower on average from the S&P standpoint. Cyclical outperformance last week was showing up in other markets as well. Copper rose 2.6%. Gold was up 0.7%. This was fitting the narrative of a rotation out of the rebound in the U.S. and global economic fitting the narrative of a rotation based on global economic activity picking up, a rebound here in the opening up of the U.S. economy, promising treatments for COVID-19. Talk about a vaccine arriving by the end of this year or the beginning of next year, and all that translated into analysts starting to raise some of their estimates. What have we experienced so far this year? The S&P 500 technology sector before today has lost about 8% in September, and value-oriented materials and industrials have added 6% and 2% respectively going into markets this morning. And what we also experienced going into markets this morning was a VIX, which has been rising. Interestingly, the VIX had remained elevated even when markets were moving higher, and now that we're starting to see a sell-off, the VIX is even moving higher. What is the market telling us about the election? In October of election years, the market was generally up when the incumbent party won. Since 1944, the S&P 500 has advanced 7 times and declined twice, and was unchanged once in October when the incumbent party was victorious. Of the 9 times the incumbent was defeated, the S&P 500 declined 6 times in October versus 3 increases for an average drop of 2.1%. So perhaps watching the markets in October might give us a glimpse of what the election may hold. beyond the election, as we move into October, another phenomenon to keep an eye on is portfolio rebalancing. Stocks having, at least so far, a very strong third quarter, despite the fact that we've sold off meaningfully here in September. Nevertheless, strong third quarter, at least in the books so far. And what that could mean is that we have a significant rebalancing out of equities, perhaps as much as $200 billion moving out of equities as pension funds and sovereign wealth funds and government pension funds rebalance their portfolios and move into other asset classes than equities. This taking place at a time when there's not a lot of depth to equity markets, and perhaps that could cause some turbulence. Final article I'll talk about from Barron's, and this is a good one on where the ball is going, is the move away from cash towards the digital payment future, in which stocks and companies could be the beneficiaries of that. And this is another story where we have COVID-19 accelerating trends that were already in place, but moving those trends forward at warp speed. One of the things, perhaps, that you've experienced individually is seeing parents or grandparents that possibly never would have used something like Zoom or video meetings in their lifetime, suddenly becoming proficient at communicating with those products. And another trend that the older generation is embracing is digital payments. Volume of ATM cash withdrawals tumbled at least 12% in the second quarter, and digital payments have ably filled in. Those cash withdrawals are unlikely to return. In fact, the rise of digital payments is one of the few COVID trends all but guaranteed to last long after a vaccine, and that creates significant opportunities for a host of tech-focused payment companies. Millions of seniors are stuck at home and are going cashless for the first time, and this is not just a U.S. phenomena. This is a European phenomena. This is an Indian phenomena. Sweden is on the verge of possibly becoming the world's first cashless country. None of these trends have been lost on Wall Street. Digital payment stocks like PayPal, Square have been some of the best performers of 2020, pushing their valuations to very elevated levels. Barron's suggesting that these high price levels could pressure those stocks in the near term, keeping short-term gains muted. But for long-term investors, they say there's still time to jump in. Two-thirds of people said that they did not make a cash transaction from March 10th through early May of this year. So as these cash payments slow down or cease in some cases, companies like eBay, or should I say PayPal, PYPL, no longer part of eBay, PayPal, have stepped into the void and are making it easier and easier to do cashless transactions. Seeing significant growth from PayPal in their Venmo app, as well as in their recently launched app to send funds internationally. Other companies that Barron's speaking highly of are Visa and MasterCard, which they say may have more upside over the next few months. Their stocks are up less than 15% this year, well below the average of 25 to 30% for the other stocks in this sector. What's happened here is the card networks are seeing lower transaction volume due to the pandemic, which has pushed down earnings and earnings estimates. But the expectation is as things approach to normalcy, which may still take some time, that they will be the beneficiaries of upward earning revisions due to the nature of the fact that more and more transactions will take place via their cards. And Barron's also speaking favorably, perhaps most favorably, about the payment processors, which they say get less attention but remain which remain vital to the future of cashless payments, and that is Fidelity National Information Services, symbol FIS, and Global Payments, symbol GPN. These are the companies that handle all the payment processing for merchants and banks, and both these companies have recently engaged in M&A transactions, giving them further scale. They trade around 27 times earnings, far below the multiples of pure-play e-commerce stocks like PayPal or Square, which Square trading well over 100 times earnings. They also traded a discount to Visa and MasterCard. The thought process here is there's still plenty of room for growth for these cashless transactions. Online shopping in the United States is just about 9% of retail sales. Benchmark in China, online retail sales are about 23%, so lots of potential room for more growth. I'm going to turn it over to Brad, talk some more about markets. Good morning, Brad.
Morning, Keith. Morning, everyone. Hope everyone had a nice weekend, and those in the Northeast enjoyed the beautiful weather out there. Last week was an interesting week. The news cycle is non-stop here, and that obviously doesn't give you a moment to relax or any time to just stop and think about a lot of things. But I think that is important that we take the time to slow down occasionally and think about things that are going on beyond the markets. There was last week in the bond market, in particular municipals, I was surprised to find that there was a tremendous amount of institutional interest. I think this is happening because the yields on a relative basis, even though as advisors, we see these absolute rates of return and they look lousy, but on a relative basis to all of the products, the municipal yields are at times they're certainly higher than Treasury yields by 2 to 3 times, and even corporate yields, municipals are higher. And as Keith Douglas and I were talking about last week, there isn't even a lot of difference between tax-free municipal yields and taxable municipal yields. So the municipals, for anyone who can buy a bond and is thinking of total return, may be looking in that market. The municipal Fed facility has seemed to alleviate some of the credit concerns, so we should be good for a little while on credit, but please don't count on this lasting forever. Additionally, the rating agencies have been very slow to downgrade municipals, and it's obvious that tax revenues are going to be down, period, across the board, across the country. So you still do want to keep an eye on credit, but that being said, you might not see a tragedy short-term on most of the bonds that you're handling because of this municipal credit facility. This week we're expecting a tremendous amount of municipal supply, and normally I would warn of a better opportunity to buy, but because of potential supply and demand sell-off that normally happens when there's a tremendous amount of issuance. But we have a different game here. We have these crossover buyers coming in to buy municipals, and as Keith had said earlier about rebalancing, as we head into quarter end, advisors are going to be rebalancing their holdings and reallocate their equity fixed income ratios, and I think that's probably going to give the bond markets some support as well as we come into quarter end. We may have a little downward pressure due to the supply. I think that the dealers underwriting the bonds will want to bring them a little bit cheaper so that they do get digested, but there could be a little leftover supply that may create a little bit of a buying opportunity here in municipals for the short term. And that's really all I have for today.
Thanks, Brad. That's everything I've got.
Thank you for listening to Mr. Keith Lanton. For more podcasts, please visit our website, www.lanternwa.com.